Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Dwarikesh Sugar Industries Limited, hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Archit Joshi. Thank you, and over to you, sir.
Thanks, Rutuja. Good evening, one and all. On behalf of Dolat Capital, I would like to welcome all of you to the Q3 FY22 conference call of Dwarikesh Sugar Industries Limited. We have with us today Mr. Vijay S. Banka, Managing Director of Dwarikesh Sugar Industries Limited. Thanks a lot, sir, for letting us host the call. Without any further ado, I'd like to ask Mr. Banka to open the call with his introductory remarks, after which we can have the floor open for a Q&A round. Thanks a lot, sir, and over to you.
Very good afternoon to everyone. We have yesterday announced our unaudited financial results for the quarter and 9-month period ended on 31st December 2021. The quarter that has gone by has been reasonably satisfactory. We have clocked the total income of 602 crores, profit before tax of 41 crores, and profit 29 crores. So this compares well with the profit, the total income, the PBT, and the PAT that we had recorded in corresponding quarter last year. So in 9-month period, we had turnover total income of 1,502 crores. PBT of 133 crores and PAT of about 96 crores. So if you look at the PAT number of 9-month period, it is more than the PAT that we had clocked for the full year FY21. In terms of percentage increase, the PAT, the increase in the PAT figure as well as EBT figure as well as the total income figure is impressive, as you can see. So we are now, speaking from the country's production perspective, yesterday ISMA has published its numbers, and ISMA estimates that the production will be about 31.45 million tons. Considering the fact that the Maharashtra and Karnataka, they are reporting good yields and good recoveries. My guess is the production could touch 32 million tons for season 2021-22. We have all the numbers before you. During the Q3 FY22, our EBITDA margin was better than what we had clocked in the corresponding quarter last year. In the 9 months period also, our EBITDA margin is better. During the quarter, we have sold sugar. We have sold about 14.17 lakh quintals of sugar, which includes 2.50 lakh quintals of export sugar that we did, which is as compared to 10.38 lakh quintals of sugar that we sold in the corresponding quarter last year. In the corresponding quarter last year, we did not have any export sales. All the sugar that we sold was sold in the domestic market. Sugar sold during FY21 9 months period, we sold about 35.88 lakh quintals of sugar, which includes 2.50 lakh quintals of sugar that we exported. So this number again compares better with what we had done in the 9 months period in the previous financial year. So we have carried a stock of 11.07 lakh quintals as on 31st December, which is a substantial reduction from what we had carried on corresponding date last year. Last year we carried 19.49 lakh quintals of sugar. So nearly 8 lakh quintals of sugar stock has come down. So insofar as the distillery segment is concerned, we've already sold about 3.92 crore liters of ethanol in the 9 months period, which is as compared to 1.89 crore liters of ethanol that we had sold in the previous year 9 months. So the term loan profile is lean and trim. All the loans that we carry in our books are at subsidized rate of interest, and our rating continues to be A+, although ICRA has recently revised our outlook from stable to positive, so which means in due course we should get the much deserved upgrade in our rating. Our short-term rating for the commercial paper program is A1+. So this is about what insofar as company is concerned. Now, India, as we have heard, we have contracts for about 4 million tons of sugar exports have been already signed, so which is good news considering the fact that there is no subsidy that is being given by the government this year. And we expect that 6 million tons of sugar will get exported. So we are looking at a very healthy sugar balance sheet for the country. We started the year with an opening stock of 8.2 million tons, and we should end with a closing stock of nearly 6 to 7 million tons. So some reduction in the closing stock level. And if you look at it from the perspective that, a couple of years ago, 3 years ago, we had an opening stock of 14 million tons. So this is a substantial reduction. All credit to the government for incentivizing exports in the last 2-3 years, and also for giving impetus to the ethanol blending policy, as a result of which we are seeing sacrifice of sugar in favor of ethanol. While in season 2021, nearly 2 million tons of sugar was sacrificed in favor of ethanol. This season, the sacrifice is going to be about 3.4 million tons of sugar. So this number is going to go up in the coming years. So we should, the sugar industry should now, in a couple of years from now, should witness a scenario where production will be more or less equal to the consumption. And if at all there is surplus, maybe a small surplus of 1 million or 2 million tons, it will be easy for the country to push it out in the export market. Because with the news that India is not going to have too much of surplus sugar, international prices also should get better. So pushing out those 2 million tons of extra sugar should not pose any kind of a problem. So we are looking at the future with a sense of optimism. Of course, optimism always has to be. We are cautiously optimistic, but as of now, things look good. The government has been supportive, and the economics of the sugar industry has been good in the last couple of years. So we look at the future with a sense of optimism. Thank you very much. Whatever questions you have, you may please ask me. I'm ready to answer them.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, hi. Good afternoon, sir.
Very good afternoon, sir. How are you?
I'm good, sir. So, sir, a couple of questions, mostly bookkeeping kind of questions. But first is on the closing stock. What is that quantum which we have at the end of the quarter, December? You mentioned in the opening remarks.
11.0607 lakh quintals.
Okay, and that was 19.5 last year, right?
Correct. 19.49. Okay. 19.5 lakh quintals.
And what is the value of this per kg?
It's valued at 3,161 rupees a quintal.
Okay, 3,161. Okay. And your average realization during this quarter was around 35 odd levels, 35.43.
Investor presentation.
Okay, perfect.
Want me to repeat? I'll
No, that's fine, sir.
Yeah.
And sir, ethanol this year will end with around 5.2, 5.3 crore liters approximately. Is that a right assumption?
See, we have already done 3.9 crore liters, so we should do anything between 1.4 to 1.4 crore liters in the 3 months period that we have now, Jan, Feb, and March. Yeah.
And with the new capacity, sir, we will end up with what level of production of ethanol?
See, so far as the ethanol season year is concerned, from our Dwarikesh Nagar plant, we expect to supply about 5.4 crore liters of ethanol. And the new plant which is going to come up and which will be operational in June 2022. And I forgot to mention the schedule of execution is perfectly on time, and we should be able to commission the plant in June 2022. So what we are doing in our Dwarikesh Dham sugar unit is that we are producing B-heavy molasses and storing it. So once this plant is commissioned, we should be using B-heavy molasses there and producing ethanol from there. So even if we were to assume that we'll get clear 3 months of distillery operations there, we should be able to do about crore and 50 lakh liters minimum from there. So together we should be able to do about 7 crore liters in ESY 2021-22.
Okay. And at peak, it will be similar to this 5.4 crore liters?
Once both our plants are operational, our model is going to be that in season we will be using juice for making ethanol. And in off season, we would be using the B-heavy molasses, which we would generate during the season, and we will use it during the off season. So we expect to produce, once both our plants are operational, we expect to produce about 11 crore liters of ethanol every year.
Okay, got it, sir. And sir, just related to this quarter, our overall, I think, EBITDA per liter, if I look at, is slightly lower compared to, let's say, previous quarter. So if you can explain why it is so in the ethanol business.
You see, firstly, I must tell you, sir, it is very difficult in the sugar industry to view the segment results on standalone basis, and number two, also on quarter basis. I mean, particularly, quarter 3 of this year is comparable with the quarter 3 of last year, but not entirely. So, in Q2, what ethanol we made was from the molasses that we had generated in the last season. And in Q3, what we have sold molasses is mostly, partly generated from what we had generated in the last season, partly what we have generated in the current ongoing season. So there has been a revision in the transfer price of B-heavy molasses based on the base price of B-heavy molasses, which has been prevailing in the market. So because of that, you will see lesser margin in case of in the sale of ethanol in percentage. Yeah.
Okay. Right, sir. Thank you very much and all the best. Thank you.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Anupam Goswami from B&K Securities. Please go ahead.
Yeah, thank you, sir. Sir, my question is on the follow-up of previous comment. So you mentioned about revision in transfer pricing of B-heavy molasses. Can you mention how much it has gone up from where to where last quarter to this quarter?
See, last quarter our ethanol generated during season 2021, our transfer price of B-heavy molasses was 670 rupees a quintal, which has been revised to 1,030 rupees a quintal.
Okay, 1,030 per quintal. Okay. But sir, on the simultaneously, we don't see that transfer pricing coming in the sugar segment. As in the EBIT margin of sugar segment So it's also gone down.
That's what I was mentioning a little while ago. It is very difficult to to view the results on standalone basis, even insofar as segments are concerned, and on quarter basis also. It's very difficult to come to any kind of conclusion.
Okay, sir. Sir, can you mention our crushing volume and recovery this quarter?
Yeah, sure, I will. One moment. We commenced our crushing operations in two of our units on the 29th October, and in the third unit we commenced our crushing operations on the 9th of November. So our crushing during the quarter was 124 lakh quintals, which is as compared to 120 lakh quintals that we crushed in the corresponding quarter last year. So about 4 lakh quintals more. So, and in this season we have been generating only B-heavy molasses across all three units, whereas in the last year in two of the units we generated B-heavy molasses, and one unit we generated C-heavy molasses.
Okay. And sir, what is our recovery this time? Net recovery is mentioned.
Yeah, net recovery. I can only talk about net recovery at this point in time because gross recovery would be a little misleading. So our net recovery is 9.79 as compared to 10.35% recovery that we had clocked in the corresponding quarter last year. I must mention two things here. Number one, the recovery may appear to be lower because we have generated B-heavy molasses in Dwarikesh unit, whereas last year we were generating C-heavy molasses in that year. So there has been more sugar sacrifice in favor of ethanol. Number one. Number two, what happens is, even while we are generating B-heavy molasses, there can be more sacrifice of sugar if the B-heavy molasses that we generate has higher TRS content. So higher TRS content would mean that our ethanol recovery is going to be better, but at the same time our sugar recovery will suffer. So this is a balancing act that we do, depending upon what we think is required. And having said that, I must say that, the recovery trends have been lower in the quarter for all the sugar mills in UP because we have had very severe winter conditions, number one. Number two, there was unseasonal and very heavy rainfall towards the end of September. So which resulted in waterlogging in many parts of Uttar Pradesh, including the central UP, West UP, East UP. West UP, fortunately, was less impacted. So that is the reason why the yield and the recovery trends have been little lower.
Okay. And sir, going forward in the fourth Q, will this be made up? Some recovery will be happening in the yield, and what is our crush possible?
Yeah. See, the January month again has not been good insofar as weather conditions is concerned. But we have seen good sunshine in the last 3-4 days, so that should improve the sucrose formation in the sugar. So from towards the end of January or from the beginning of February, we see more of plant cane coming because we would have exhausted ratoon crop. So plant cane with the recoveries are always better. Now let's see how much we are able to make up from the recovery that we have already lost. That we have to wait and see.
Okay. And sir, what is our crushing target for the season?
The crushing target is last season we crushed about 378 lakh quintals. So my guess is we should crush at least 375 lakh quintals this year. We were expecting to crush more this season, but because of the unseasonal rainfall, waterlogging, the yield at the farm levels also has been lower, particularly in case of ratoon crop. So we will have to wait and see. There could always be some late recoveries insofar as is concerned when it comes to plant cane crop. So we will have to wait and see. But in any case, we should be able to do at least 375 lakh quintals.
Okay. So my last question is export net realization. How much are we getting?
See, we have exported about 25,000 metric tons of sugar. So we had contracted this at 3,450 rupees a quintal delivery at Kandla. So we incur transportation and other expenditure of about 2,200 rupees per metric ton. So net realization is between 32 and 32. It's about 32 and a half, 32,500 rupees a metric ton.
Okay, got it. So thank you, sir. I will get back in the queue.
Yeah, sure.
Thank you. The next question is from the line of Karan Agarwal from Tusk Investment. Please go ahead.
Very good afternoon, sir.
Hello, am I audible?
Yeah, I can hear you. You need to be a little louder, sir.
Yeah, thank you. Thank you so much for taking my question. So I have two questions from my side. One is around, as I've seen in the presentation, that our sugar sold volumes has considerably increased over the previous year. Why is that? Is it because we have received more quotas or because of the export component coming here in Q3 FY22 numbers?
Yeah. Number one, export numbers are coming in Q3 numbers. Number two, our quotas have been higher. Now, why our quotas have been higher is because we have done exports, a lot of export in the last year. And plus, we have also been generating BAV molasses and making ethanol and supplying it to the OMCs. So weightage has been given to that also. So as a result, our quotas have been higher, and that's the reason why sugar volumes have gone up.
A follow-up question on that. Sir, like you mentioned that the Q3 FY22 volumes also constitute our export contracts. And the export contracts were done at around 32.5, like you mentioned in the previous answer. So, but if I look at the average realization, it's coming to 35.43 per kg. So, does this mean that the domestic realization?
So the sales of export sales is booked at 34,500. Okay. Export sales is booked at 34,500. That 200 to 250 rupees per quintal of transportation cost, etc., is contained in the other expenses.
Okay, and the domestic realization could be around 36, 37, if I'm correct.
35 something, I think we have given it in the presentation. One moment, I'll tell you.
No, the overall realization number is 35.43 per kg, but this also includes the...
No. See, the blended average realization is 35.27 and domestic realization is 35.44.
Okay, sir. Got it. Thank you. Thank you so much, sir. I'll get back in the queue for more questions.
Yeah, sure.
Thank you.
Thank you. The next question is from the line of Rajvardhan Sundalia, an individual investor. Please go ahead.
Good evening.
How are you, Mr. Banka? Congratulations on a very good set of results. So, Mr. Banka, I had most of my questions have already been answered. So I have a couple of basic questions. Going ahead, since you mentioned that this year was mainly B-heavy and you guys are going to store molasses, B-heavy molasses to use in the off-crushing season, and during the crushing season, you guys are going to primarily make ethanol from juice. So my question is, your season runs around 9 months a year, correct?
No, 6 months, 5 to 6.
So we'll be doing. So can I assume that we'll be doing 50% if going ahead we had to project a number for how much B-heavy and how much ethanol you'll be producing from juice? Could we say 50% from ethanol and 50% from directly from 50% from B-heavy and 50% from juice?
Yes.
So and we projected 8 crore liters for next year, FY23, correct? If I'm not wrong.
FY we should be able to do 8 crore. Yes.
FY23, right?
Yeah.
And then
24 we will be able to do 11 crore liters.
And out of 11 crore liters, 5.5 crore liters will go to directly from juice and 5.5 crore liters from B-heavy molasses.
Approximately when we get closer to operating both the plants, that is the time when we will decide on the right raw material, feedstock mix.
Sir, do we have enough? Is this because we don't have enough molasses to service the amount of the capacity we have for a distillery? Is that why we're going to reserve?
No. See, it's like this. With the kind of capacities that we are going to have in the times to come, with the new distillery also coming up.
Correct.
We should not be, by following this mix of raw feedstock mix of juice during season and during off season, heavy molasses. We will neither be having surplus molasses nor we will be required to purchase molasses from outside. So we will be self-sufficient and be able to both the distillery plant for about 320 days a year.
Very interesting. And sir, do you think you'll be able to export your entire excess sugar inventory apart from your buffer stock, obviously, within the year?
No. You see, we have already exported 25,000 metric tons of sugar. For further export contracts, signing of further export contracts will depend upon how the international price of sugar is, which presently is subdued. So at this price, we have no intention of signing any export contract. We might sign if the prices get significantly better.
Okay, and so my last question is how much eventually at 11 crore liters when we'll be producing a blend of B heavy and juice directly from juice, what is the kind of sacrifice we'll be getting on our sugar production?
We should be able to sacrifice nearly
in terms of percentage.
25 to 30% of sugar production we should be able to sacrifice.
So in terms of yield, how much is that going down by?
You mean the recovery?
Yes.
Well, so far as the gross recovery is concerned, there would be no sacrifice. It wouldn't be going down. In so far as the net recovery is concerned, it will go down substantially.
So can we assume net recovery to be around 9%?
It might be. I have not worked out those numbers yet.
Okay. Sure, sir. Thank you so much.
Thank you. Thank you.
Thank you. The next question is from the line of Namaste from GT Advisory. Please go ahead.
Hi. Good evening, sir.
Very good evening, sir. How are you?
All well, sir. All well. Just a comment, since most of the questions have been asked and answered. Good numbers. We're at an EPS of 5 for the 9 months. Looks like we'll end the year around 7.5. So that's a 50% jump. You normally pay a 1 rupee dividend. Last year, you guys gave 125. Can we as investors expect a 50% jump in the dividend? Or higher? Because I keep asking you the same question, dividend policy, but it's never addressed.
No, so, once our year is closed, once we have the numbers, once we have a total visibility insofar as the cash flows is concerned, that is the time we will take a call on our dividend quantum, and I can assure you that it will be good.
Okay. And so every company now, especially the leading companies, have started giving interim dividend. Either it's in the second quarter, like Triveni, or in the third quarter, like all the others, including actually Dalmia has announced an interim. Are you considering in the future to split this up, like give an interim after the third, and then whatever is the final 0 or extra in the last at the end of the year?
So first and foremost, our priority is to commission our distillery plant at.
वो तो हो ही रहा है, आप बोले जून में हो जाएगा.
जून में हो जाएगा सर. तो
फिर तो पैसा है, क्या करोगे? थोड़ा तो बांटो सर.
Definitely, sir. We have not yet become debt free as such. We have. We have working capital debt most of the time. So anyways, debt requirements are coming down. I quite fully agree with you. But yes, once our position becomes a little more stronger, yes, why not, sir? We will also would want to remunerate our shareholders in a manner that they are happy.
Looking forward to that, sir. Thank you.
Thank you, sir. Thank you,
Thanks.
sir.
Bye.
Thank you.
Thank you. The next question is from the line of Ashutosh Choubey from Centra Advisors LLP. Please go ahead.
Hi, sir. Thank you for the opportunity.
Very good evening, sir. How are you?
I'm good, sir. Thank you. So my question is with regards to the sugar realization. Even in the month of November, December, we've seen that in UP the prices were as high as 37, 38 rupees. I just need to know why is that our sugar blended prices realization is still at 35 rupees and not a bit higher?
But the realization that you are talking about, those realizations are in spurts actually, not on a sustained basis. If you ask me on a sustained basis, what we have got, what the kind of realization we have got is a reasonable realization. I must mention here that there are a couple of factors which impact the realization. Number one, our realization could be a little lower because we are in the hinterland. So there are mills which are there on the highways, etc. So they always get a little better realization. And there are the realization that you spoke about perhaps could be of refined sugar, whereas we do not make any refined sugar. So various compelling factors. So I wouldn't say that our realizations are low, but yes, every effort is being made to improve our realization.
Okay, sir. Fair enough. Thank you. So my next question is with regards to the sugar inventory. Now it is seen that the inventory has been expected to be around 31.5 million tons, and there is no talks going about any incentives, export incentives from the government's end. So do you still see that, like you mentioned in the opening comment, that we could see a 6.5 around million tons of exports happening this year? Will this sugar inventory again cause any issue to this sector?
No, sir. See, already 4 million contracts for 4 million tons of export sugar have been signed. Okay. Now 2 million tons, there could be, sugar prices international sugar prices may be subdued today, but there are opportunities which come where, there are these daily spurts in the sugar prices. So that is the time when sugar mills would be looking to contract more sugar for export. And we have a long way to go. We are just in the month of January. We finished January, so there are a few more months where there is every possibility that contracts for 2 more million tons of export sugar can be easily signed. And the consumption numbers also are improving in the sense that ISMA has estimated that we should have a consumption of about 27 million tons. So 27 and 6, 33, opening stock of 8 and 32, 40. So yes, we can see we see inventory levels moderating from the 8.2 million ton level of as on the 30th September to about 7 million tons on 30th September 2022.
Okay, so as of now, okay, yes, go ahead.
And that's a decent inventory to carry in the sense that it's a kind of inventory where there will be no runaway increase in the sugar prices. And it is also a kind of inventory which would offer reasonable prices to the sugar mill.
So, sir, this ongoing sugar prices that is prevailing right now, that is around 18.5 cents. So this should be a comfortable number for the industry, right?
Not for us in UP, sir. Not for us in UP. And even at this prices, even Maharashtra mills are not signing contracts for export.
Okay. So yeah. Probably because we are in UP, we would need a 1.5 rupee of more logistics cost. That's the reason, right?
Yeah. At least it should be. See, there are multiple factors here again. Number one, the international sugar prices. Number two, the exchange parity. I mean, higher if the rupee falls, if the rupee depreciates, it's more attractive to book the forward covers. So, host of factors. Definitely, at this prices, definitely we will not be able to contract sugar for export.
Okay, sir. So, next question is on the debt and cash levels. If you could give me that number as on 31st December.
Sure. Insofar as we have had 3 term loans. One is a soft loan which is given by the state government of Uttar Pradesh, which carries an interest of 5% per annum. So the total outstanding there is 67 crores. We have a distillery loan which we had availed for our Dwarikesh Nagar distillery plant. That loan was the loan quantum was 116.88 crores. There the outstanding is 93.5 crores. And the new distillery which is going to come up in Bareilly, in Dwarikesh Dam plant in Bareilly district, we have been sanctioned a term loan of 185.6 crores. And we have already availed 30 crores of term loan by 31st of December 2021. So totally about 91 crores as on 31st December 2021. This loan quantum is going to go up because we will be availing the entire loan that has been sanctioned to us for the distillery at Dwarikesh Dham unit. We have been able to moderate our working capital debt. It's been because the inventory levels have come down, so which is reflected in the interest cost that we have incurred during the quarter.
Okay, sir. And the cash levels would be?
I didn't get your question.
Sir, the cash balance?
No, we don't have cash balance. We always borrowers. We have working capital debt also.
Okay. No.
Yeah.
So
there are times in a year where we may have surplus cash, but at least during the season, typically in sugar industry, when the season starts, the availment of working capital limit is not there or very little. And as the stock levels peak up around April end, the utilization goes up.
Okay, understood. So just one last question. This is more of a hypothetical question that, long back there was this report issued by NITI Aayog saying that India would roughly require around 1,200 million liters of ethanol. So we are still short in terms of capacity. Now going forward, once the capacity, a lot of companies in last 1 year have announced their capacity, ethanol capacity. Even our company has announced where we have the upcoming capacities in July. So do we see a next leg of growth coming in next, say, 1.5 year, 2 years maybe? When do we see that next? Because it's still shortfall of the capacity of the total requirement that we want.
See, most of the sugar mills are planning expansion of the distillery capacity, like we have also done. There are many others who are doing. There are sugar companies whose balance sheet perhaps doesn't evoke much confidence, so they are the ones who are maybe finding it difficult to get loans from the bank, but then the government is supporting them by working out this mechanism of tripartite arrangement where the sugar mill is a party, the OMCs are a party, and the bank is a party. So they are working it out, so we should see some, a lot of loans being sanctioned under that scheme where the standard operating procedures have also been laid out. And additionally, according to my information, I do meet bankers and all. They've been flooded with requests for setting up of distillery based on grain. So we will have to wait and see. But yes, the momentum has been set. The momentum has been set, and there's a lot of enthusiasm among the sugar mills also, and to set up capacities. And besides sugar mills, there are others who are wanting to set up distilleries based on grain.
Okay, understood, sir. Thank you very much, sir.
Thank you.
Yeah.
Thank you. The next question is from the line of Vikram Vilas Suryavanshi from Phillip Capital. Please go ahead.
One question is that how much is the current landed cost of a cane for us?
So it's we procure more than 90% of our cane that we procure is the early variety. So in case of early variety, the price for cane delivered at sugar mill gate is 350 rupees a quintal. And we have, we are also required to source our sugar cane from the centers which have been set up. And plus, so there is transportation cost involved. And then additionally, we are required to pay society commission also, which is 5 rupees 10 paisa or so. I'm not too sure on that. So that's another payment that we are required to make. So 350, and you can add definitely anything between 10 to 15 rupees. So 360 to 365 becomes the landing cost of sugarcane.
Got it. And one more question about we have also seen some of the report where some of the companies are going for juice to ethanol or bio syrup, where you can store the juice with some process for throughout the year. So what we are seeing that the kind of capacity addition we are seeing in distillery, is there any scope in future to go for like a juice to ethanol or bio syrup to ethanol or expanded distillery capacity further? So your thought on this basically juice to ethanol kind of opportunity?
See, as I have explained already, our model will be to run the distilleries, both the distilleries on sugarcane juice during the season, and to run those distilleries on with B-heavy molasses at the feedstock during the off season. So, with the current capacity of sugar as well as distillery, we will neither be required to buy molasses from outside, nor will we have any surplus molasses. When I say surplus molasses, I mean after meeting whatever is our levy obligation to the government of Uttar Pradesh for country liquor purposes. So we will neither have surplus nor will we be short of molasses at the present capacity of the sugar mills as well as the distillery. So if there has to be further increase in the molasses ethanol generation, we will have to ramp up our sugar capacity. I mean, do some vertical growth in our sugar plant capacity. Only then I see some increase happening in the distillation capacity.
Okay. So when, just like example in a season when you are saying that I will use juice to ethanol and B-heavy will store for off-season. So when during season, say when you are using some juice to ethanol, in that period we will also be getting C molasses then? And that will become...
No. We will not be generating C-heavy molasses. The C-heavy molasses is history for us.
Okay. Since because you are producing B-heavy, then you will not get, and that B-heavy will be stored.
Even our country liquor requirement, we will be fulfilling by supplying B-heavy molasses.
Understood. Okay. Yeah, that was helpful. Yeah, thanks.
Yeah.
Thank you. The next question is from the line of Kunal from Valum Capital. Please go ahead.
So thank you for the opportunity, sir. I joined the call a bit late. Can you please tell me what was the recovery in this quarter and how do you see the recovery going ahead?
See, the recovery during the quarter, which relates to season 2021-22, was 9.79% as compared to 10.35% in the same quarter last year. The drop in the recovery is because of our generating B-heavy molasses from Dwarikesh in Dwarikesh Dham unit also, where we were generating C-heavy molasses last season. So which means we have sacrificed more sugar in favor of ethanol throughout, across all our units. And then, of course, because of the unseasonal rainfall during late rainfall during September, and also because of extremely cold climate conditions, the recovery trends have been little lower in case of ratoon crop. But now there is sunshine, so that should help sucrose formation of the sugar. So while it will be too early to talk about the recovery pattern for the entire season, we have had some dent in the recovery so far. Let's see whether we'll be able to make it up in the balance part of the season.
Understood, sir. So this quarter, what was the gross recovery? Before B-heavy.
Gross recovery is also lower as compared to last year, at least by about 0.2%.
Understood, sir. Got it. That's it from my side. Thank you very much.
Thank you.
Thank you. The next question is from the line of Dwanil Ketan Shah from iWealth Management. Please go ahead.
Good afternoon, Bankaji. How are you, sir?
Good afternoon, sir. How are you?
All good, sir. Sir, just a couple of questions I had. As you were saying about the recovery rate.
I'm sorry to interrupt you, Mr. Shah, but your voice is not clear, sir. It is echoing.
Is it better, ma'am?
Yes, please.
Yeah, now it's better. Yeah.
Okay. So sir, just wanted to understand on the recovery rate. We've been reading a few articles where, sir, it had mentioned that some kind of disease have kind of taken place in the UP side of it in the sugar crop. So just wanted to understand from you how severe this is. Are we also impacted by this, and hence our recovery rate is lower?
Well, not entirely. You see, let's divide UP into three parts: West UP, Central UP, and the East UP. Okay. So the problem of red rot is more severe, more intense in the East UP, and of course in parts of Central UP. So we have two of our units in West UP. They're more or less in West UP, I would say. So where the impact of the red rot is much lesser, but in the third unit that we have, Bareilly, in the Bareilly district, there the intensity of the pest attack is a little more. So we are working on a program to replace the variety 0238 in a planned and phased manner. There are some interesting varieties which are available, such as 15023, 14021, etc. So we will, this is the transition phase. Actually would take about 4 to 5 years, but we are working on it, and we will ensure that our crop is as robust as it should be and should not be pest prone.
Okay. So sir, in the third unit, which you said that Bareilly, you are seeing this red rot impact. So what happens that time, sir? So the production would be far lower there compared to the other two units, or what is the impact of this disease?
Yeah, so when the impact of red rot is there, the yield obviously is lower. So we will have to wait and see. In case of ratoon crop, we have seen little lesser yield, but
how much that would be, sir, vis-a-vis the normal?
We are still 3 months away from total closing of the season in that unit, so it will be difficult to say how much is going to be the impact. But last year, for example, we crushed about 120 lakh quintals of sugarcane in that particular unit. So this year we should be able to crush the same 150 to 120 lakh quintals of sugarcane in that unit.
Got it. And what is the recovery you are think we should end this year by? So currently you said that on gross we are 0.2% lower, right?
No, you see, net recovery obviously will be lower because we are sacrificing more in favor of ethanol. Insofar as gross recovery is concerned, like I mentioned, we already suffered a dent in case of ratoon crop. But there is every possibility that we should be able to recover some lost ground in case of plant cane crop. So we will have to wait and see to assess the total impact on the recovery for the full season.
Got it. Okay. And sir, what is the distillery volume which we would do in FY23? I missed that number. From the old and the new plant.
8 crore liters in FY23.
From both the plant, right, sir?
Yes. The second plant would be operational for part of the year. So that will not get the full year. So we expect at least about 8 crore liters.
And this year around 5.3, 5.4, as you said.
Yeah, 5.3 to 5.4.
Got it. And sir, in spite of our sugar prices YOY increasing by 3.5-4 rupees, so when we see the profitability of sugar has not come, sir, even last
That is what I was telling you right at the beginning of the Concall, that it is very difficult to segment we should see the results in totality rather than segment-wise.
Even, sir, when we see that, I mean...
And again, I must mention that, we should not see it quarter-on-quarter basis. At least quarterly results, we should not view them in isolation. Typically, for all the sugar companies, the fourth quarter is the best of the lot, actually.
Right.
So I'm not trying to say how good or how bad it is going to be, but typically that has been the trend.
Good. Great, sir. Thank you.
Thank you, sir. Thank you. Thank you.
Thank you. The next question is from the line of Karan Agarwal from Tusk Investment. Please go ahead.
Hello.
Yeah, good evening, sir.
Hi, good evening. Thank you, sir, for taking another question of mine.
My pleasure, sir. Entirely my pleasure. Please.
Yes, sir, my question was that since our distillery will be up and running in the first half of FY23 itself, what are our plans going ahead in terms of expansion? Because there are, as far as I understand, there are other extensions also. For example, we could set up a biogas unit, or we can make our own IMI liquor also, or we can extend into specialty chemicals. So what is the vision of your company beyond that? I understand it's very difficult to say now, but what is your vision?
So, with the present distillery capacity and with the present sugar capacity, they complement one another, and we see possibility of no molasses surplus or no molasses deficit situation. Okay. But yes, there are options available as we go forward. We could expand the capacities of our existing sugar mills. We will have to assess the cane availability situation. Undertake a massive cane development exercise so that areas where sugarcane is not grown, we must make them grow sugarcane, and we could expand the sugar plant capacities. And when we do that, obviously we will have more surplus of molasses. So distillery capacities also can be ramped up. Or as you said, one can always use the capacity for some specialty chemicals, etc. The one area where we are lacking is the refined sugar. We don't make refined sugar, so that's another thing which can be explored. But our present thoughts are totally on setting up the new distillery, stabilizing its operation, and then step on the accelerator and go to the next level.
Okay, thank you so much, sir. It answers my question.
Thank you, sir.
Thank you. The next question is from the line of Chalak, an individual investor. Please go ahead.
Yeah, so my question. Hello, sir.
Yeah, good evening. Good evening.
So my question was the COGS, if we see on QOQ basis, so the percentage of your COGS to sales was 74% in the last quarter, which has increased to 80%. Sir, any specific reason for that?
No, actually, we've been, the sugarcane prices also has gone up. So that's one reason. And let me, I may sound repetitive, but like I said, we must not see the quarter results in isolation.
Yeah, obviously. But sir, on your yearly...
Your sugarcane prices have gone up by 250 rupees per metric ton.
Okay, and what will be the gross margin sustainable for the year, if you can give a guidance on that?
Ma'am, I will not be able to give any guidance on this, but yes, the fourth quarter is typically a better quarter for all of us. And based on the trends that we have seen so far, we have already, in the 9 months period, we have already exceeded the profit for the full year of 2020-21. So the trend seems encouraging. We are optimistic for the fourth quarter as well. So let's wait and see. Yeah.
Okay. So my next question was, as you said, for the quarter three number represents some of your export of sugar. So can this volume for sales can be considered sustainable or based on the seasonal nature? I also understand the seasonal nature, but can this 14 lakh quintal can be a proper sustainable number, or we can expect a lower number because exports are included in quarter three?
Absolutely, you're right. As per the presently prevailing international prices, I don't see any possibility of signing further export contracts unless the export prices improve, international prices improve significantly. So that's one. Otherwise, domestic quota we should be getting sugar. Domestic quota of sugar we should be getting as usual. So definitely, we will not be able to have the same kind of volume numbers for fourth quarter which we had in the third quarter unless we sign some export contract.
Okay. And so last question was on since the extended capacity of distillery that we have. So sir, is that capacity fully sufficient for the sugar cane that would be crushed and decovered, or can we even if we set up extra mill for crushing sugar cane? So will this distillery capacity suffice that?
I think I answered this question. Our distillery and sugar capacity, they complement one another. So with the kind of crushing capacity we have and with the kind of cane which is presently available to us, we should be able to run the distillery plants, both the distillery plants, for at least 320 days in a year. Which is based on the model that during season we run it on sugarcane juice directly, and during off season we run the distilleries on B-heavy molasses. So they complement one another, and in a situation like this, we will neither have surplus molasses nor we will be deficit on molasses.
Okay. Thank you, sir.
Thank you so much, ma'am.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Anupam Goswami from B&K Securities. Please go ahead.
Hi, sir. Sir, any update on the new variety of cane that we were using? Any update on that?
Yeah, we embarked upon a program to propagate that variety in a big way. So the method is to, firstly to get seeds, do the multiplication of seeds, plant it, in cooperation with the farmers, use the variety in some plots which are on the main roads. So they act as demonstration plots. So, with some seeds being available for the coming seasons, obviously multiplication will happen, and we are sure the demonstration plots the farmers will be able to see good results in those demonstration plots, and there will be increased enthusiasm in times to come. And as I mentioned, it's a 5 years program, so we can bring about a decent varietal mix in our sugarcane availability in the command area. We can have all the varieties. Even 238 continues to be a sturdy variety, except that in East UP and parts of Central UP it has been infested with red rot. Otherwise, in West UP we have seen no problem insofar as this variety is concerned. But yes, going forward, we would like to have a healthy mix of all the varieties.
So this new variety, does it have a higher recovery rate, or it just steady?
It's got both. It's better insofar as recovery is concerned, and it's also better insofar as yield is concerned.
Okay, sir. And so one thing you mentioned that you would be fulfilling your alcohol molasses levy that is by the UP government. Why is it with the B heavy and not C heavy? Because I'm to understand you will get the same price as C heavy molasses.
No. Number one, the quantity will be lesser. The formula that will be applied is if you, for example, if your C heavy molasses obligation is X, then your B heavy obligation would be that X multiplied by 22.5 divided by 31. That is the yield that you have. So number one, your quantity that you are required to give will be less. And number two, the price also, as against 140, the price of B heavy molasses will be 210 rupees a quintal.
Okay. And what was C? 210 you mentioned, right?
Yeah, for levy obligation purposes.
And what was C heavy earlier?
C heavy has been, there is no fixed price as such, but the indicative price is 140 rupees a quantity.
Okay. Thank you, sir. I'll join back.
Thank you, sir.
Thank you. The next question is from the line of K. Mohan, an individual investor. Please go ahead.
Sir, do you expect that with the exports being low in the fourth quarter and the production being the highest in the fourth quarter, the export carry forward stock into next season will be much higher than last year's carry forward stock in the whole country as a whole?
No, sir. No. Let me talk about our company first. We have on 31st December, we are having stock of about 11 lakh quintals, which is 8 lakh quintals, 8 to 8.5 lakh quintals less than what we were carrying on the same date last year. Okay. As it is, if you see, with the entire country, I have already explained this. We should see some moderation in the stock, closing stock of 2021-22. From 8.2 million tons, we should come down to about 6.5 to 7 million tons of closing stock. So I don't see any problem there, sir.
So do you don't expect that there could be, because of the higher stock, there would be a price drop in the market, the sugar price?
No. The market works on perception. So the perception is that the closing inventory levels may be lower, so the prices will be reasonable. So there are various phases, sir, when the prices, swing either way. We've seen these winter months when the prices are little on the lower side, they remain subdued. And also because of the fact that, Maharashtra mills have commenced production, so they are a little more eager to drop prices. So, and then just before the start of the season, the prices get better. So we've seen, and the summer months, the prices are always better. So I don't see any challenge to the selling price of sugar in the coming months.
Do you think that I hear that this year again Brazil is having a drought, and therefore the Brazil crop comes in only after June, July, and estimate of what Brazil can supply. If there is a drought again, do you think international prices are going to go up from the current level of 18.5 cents to 19 cents a pound?
So Brazil last year, because of the drought, season 2021, there was a deficit of 2.5 million tons. 21-22 again internationally is expected to be a deficit year with a deficit of 2 million tons in spite of better crop and better sugar production in Thailand, India. But in the rest of the world, the gains are limited. So we are seeing this deficit. So international prices had touched a high of 21.5 cents a couple of months ago. But then India participated very enthusiastically in exports. So maybe that has had some effect on sobering down the international prices. But then there is general news is that, sugar production internationally is going to be deficit. So we should see some rally in the sugar prices both internationally as well as in all the domestic markets of the world.
Thank you, sir. That's very illuminating. Thank you.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you, friends. Thanks a lot for being with us. It's always very interesting and very encouraging to have a conversation with you all. Thank you very much for reposing trust and confidence in us. And as I keep repeating after the end of every conference call, that we'll try to do our best. We've been efficient in our operations insofar as recovery is concerned, and even other parameters are concerned. So we will continue to do so. We'll try to do better and better as much as is possible. Thank you very much. I look forward to your support and guidance for all times to come. Thanks.